And 5. Good afternoon and welcome back to Nasdaq Trade Talks. I'm your host, Jill Malandrino, global markets reporter at Nasdaq, and we're excited to kick off our new series, Sector Talks, with Nasdaq's IR analysts within our business intelligence unit. Helping me do that, we have Masad Ghazi. He is with the Corporate Solutions Business Intelligence Group over at Nasdaq with his macro perspective and 2019 outlook. It's so great to kick off this Sector Talk series with you. Thank you so much for joining us at MarketSite. Now, to kick this off, let's get your feeling in terms of the tone of the market, what you're seeing out there right now.
Sure. So thanks for having me on your show. It's an interesting time. Sentiment is definitely positive. It's that of risk on. Equity markets on a year-to-date basis have gone up anywhere between 8 to 12%. We're out of bear market territory. It's being led by energy, industrial, small cap, and growth names. Tech names have been performing in line. Defensives have been underperforming, and also junk bond market and loans have picked up. However, investors remain cautious.
Right.
Now, relative to Q4, in which we saw a lot of volatility in bear market, what has changed? 5 points here. One, U.S. economic resilience. We're seeing the agricultural index back up. Farmers are happy. We're also seeing the consumer sentiment, manufacturing, and also services drop, soften, but level off. And this is also true for the small business optimism index. Labor market continues to remain strong. So that's one, U.S. economic resilience. Two, the Fed has turned dovish, and incrementally so since December. And when the Fed turns dovish, this has the effect of unleashing liquidity and sapping volatility out of the markets. Three, we're seeing U.S.-China trade deal optimism. Tariffs and trade wars are essentially a tax on U.S. businesses and consumers. Overnight, we saw data coming out from China showing how imports have declined in China as a result. So with both sides striking a positive tone and a potential deal looming, markets are cheering this event. So that was three. Four, we're also seeing earnings optimism. And finally, five, a global economic outlook that was not as bad as feared.
Well, you know, it's interesting. You're getting a lot of fixed income conversation back into the market and how the equity markets are looking for clues from the bond market. What are you watching?
It's interesting because there's a dichotomy between what the bond markets are telling us and what the equity markets are telling us. Yields have been falling over the last few months, and generally when yields fall, that is indicative, or bonds rallying, that is indicative of a pessimistic outlook, especially on the long end of the curve. So once these viewpoints converge, the equity market and debt market, we should expect some volatility in either markets. All
right, and to wrap it up here, did you get any clues in terms of the business sense out of the State of the Union last night? Any clues on the macro economy?
I think it was generally neutral, limited impact. Back in November when I spoke, I mentioned that, and this was after the midterms elections, with respect to a divided government, divided Congress, I should say, policy impact will be limited because of a gridlock in the system. So going forward over the next 2 years, expect limited effects coming out from a policy standpoint, away from tariffs that will impact markets.
All right, so thank you so much for kicking off the Sector Talk series with me.
Thanks so much, Jill.
And thank you for joining me throughout the week. I'm Jill Malandrino.